Well guys, what's going on? Dylan here. So today I'm just going to discuss what's going on in the portfolio. So as you guys know, I have made a little bit of a group. It's grown quite well. The community's coming on lovely. But as you know, our number one goal is going to be pure transparency. So I'm going to basically every week make a video like this, and I'm going to detail what's going on in the portfolio, what we can do, what I've done wrong, what we're gonna do moving forward. And this is gonna keep popping up. I need to disable that. It's been doing my head in all day. But anyway, basically, let's just get stuck right into it, and I'm gonna show you guys what is going on in the portfolio at the minute. So currently, as you guys can see, we are in the negative of $1,570 on the year. So that's in the last couple of weeks. Now that's to be expected. That looks worse than it is. As we know, the P&L resets at the end of every year or at the start of every new year. So Marathon Digital actually ran up very significantly and very quickly at the end of last year, which obviously made the P&L last year very green. But as it's corrected now, obviously it's making this year look worse than it actually is. So let's get into Marathon here quickly, and we'll give you a quick update of where I sit on it. So right now, on this particular portfolio, I have 100 shares, which I bought at $11.38 or something like that. I can double check my spreadsheet. We have 5 cash secured puts at the 14 strike, 58 DTE. We have a 13 cash secured put at 93, a 15 cash secured put at 93 DTE, and a 12 cash secured put at 126 DTE. And then I have a 40 call which I had sold. Now, this 40 call is a hedge against my shares, okay? So that's a covered call. Now, that basically means I know I still have another $400 of protection on my Marathon shares this year, okay? This was actually up at over $1,000 protection whenever we were about 31. And so right now my portfolio will be a lot more red than it is if I didn't have this protection. So I'm very grateful for that. Now you may be wondering, why are all these so far away? Well, I actually originally had loads of cash secured puts at the 18 and 20 strikes, even the 25 strikes. Now, what I did was I kept rolling and rolling and rolling, and I've got these pushed out and down, some of them over 150 days. However, I've dropped the strike significantly because I had absolutely zero intention of buying Marathon Digital at above 20 a share. I don't have an intention of buying it at 15 either. So this 93 call or put will be rolled out to the next strike, maybe even rolled out a year. It doesn't bother me because it takes up such little buying power. For example, if I was to roll this out a year now, let me show you this. If I was to roll this out a year, I could drop this to a 10 strike for credit. Okay, that would be a price that I would definitely take assignment on Marathon Digital. Okay, now there is pretty much no downside to me for rolling this position to that, considering that the buying power requirements are so low, and I actually get 500, almost 500 buying power back from rolling this position. Okay, so that is going to be my first line of defense with Marathon. Let me just grab up the Marathon chart right now, and I will show you this for a second. So here's what we have on Mara, okay? Now, I am totally okay buying shares around the $11 to $12 mark. As you can see, there's gonna be huge support here because this is where this huge sideways range right here took place, and it was between $10 and 8.6. If I can get a sign just above that or even in that range, that would be a mega price to own this company at, and I'd be more than happy in doing that. So that's a very quick rundown of where we stand on Marathon Digital. I will do individual videos breaking down, for example, how I got to where I am on Marathon Digital, in terms of how I got my break even from over 25 down to like 13. So I will show you some more of what's going on in the account right now. Okay, what else is making the account red today? So as you see, we're negative almost $400 today. Okay, so what we can see here, let's go to P&L, sort this by P&L day, and right now what we can see is we're negative $100 on some of our futures trades. We're going to find out what's hurting us the most. So what's hurting us the most is this coverage triangle, okay? And it seems to be that it is the Okay, yes, it's the okay. It actually doesn't make sense because oh yes, it does make sense, right? So this here is hurting us the most. As you can see, we are down. Okay, we're down 30 points on this. Okay, so as you can see, if I go to where our coverage triangle is, we are still well outside the expected move. So I'm not worried. However, if this hits 4,600, I am going to take assignment of this contract because this is a coverage triangle. I sold 2 of these for that reason. One of them is I will take assignment of this one if needs be, and the other one is obviously the other leg of this triangle, and I'll roll that out if I get assigned this one, and then we'll end up with a complete coverage triangle. Okay, so futures are red today, which is making the account also look not too nice, but that's fine because you look, we have $458 of extrinsic on these futures contracts. All extrinsic values, that's just burning every single day. Every single day that is just chipping away and burning and burning. Next, oil. We can see that the oil 112 position that I opened for 58 DTE is now sitting at it's actually at, let me see, it's actually at $50 profit, but right now, today, it's down $100. That's fine. I'm actually considering opening up a further out oil position, which I will show you here in a wee second. The oil call side is currently down $20. We're up 30 on that today. That's fine. If I just go quickly into that pop-up is so fucking annoying, but I'll sort that out later. Right, if I was to go into oil and we go 120 days out, I'm sort of thinking of opening another one of these positions today or maybe even this week. I'll see. I like selling having a look earlier, the 46 to me looks good. So right now, if we sell the 46 and we sell 2 of these, we're going to get $780. And it's going to take away, call it 2.5k buying power, and then we're going to keep 2.5k on the side for the span margin. So that's going to pay us $780. Now, obviously, we're going to want some protection because I'd rather it be a 112 trade. So, 2 options. Number 1, we can go right outside the expected move. So maybe buy the 61, sell the 60, drop them down to 1 each. Okay, so that is going to net us $550 if the price ends up anywhere between here and here, and it will net us $1,550 if it ends up anywhere between 60 and 46. Okay, let me just get the chart up and I will give you a very quick rundown of this. So we don't even need to do that. CL crude oil futures. Okay, so here we go. Basically, let me turn my indicator off quickly. We've got a lot of support coming up here. Right underneath us, right here, we got major demand. So I'm expecting some sort of bounce if it pulls back down to here, right, which is perfect, absolutely perfect for this trade. Or if it would break down from this zone, what we can see is below 60, which is right here, is where I would make my max profit on this trade. So if it fell below that blue line, let me just double check. No, 60. If it fell below that blue line and ended up above 47, right there, what we would do is this is how this trade would play out. Okay, I'm going to make this a bit bigger for you guys, and I'm going to move this in. This is how this trade would play out. So if oil did this, we make 560. If oil does this, we make 560. If oil does this and ends up anywhere in this range, we make 1,550. And if oil breaks down below here, we start to lose. Now, here's the thing. Let's have a look at how far out of the money this actually is. From our current spot here, that is a 33% crash in oil. Okay, and like if you look at the prices where that was just when that was like at key support around here. And you're at a lot of high volume area and traffic around here. So to me, this is a very safe spot, considering we also have mega support coming up around there. Very big support coming up around this sort of area. Okay, so to me, this seems like a very good trade. I might take it later on, and that would net us 12.6% return if our base profit is hit, and over 30% return if our max profit is hit. So next, what we can do is we'll have a look at Chewy. Okay, so I'm going to make a dedicated video on this, okay? Because this position has been torturing me since August. I am currently sitting at, well, the broker tells me at 1,400 on loss on open, but it's actually less than that because that's only showing me open positions. After me rolling and covered calls and selling other cash grab puts, I'm actually closer to like $1,000 loss on this now. But I'm going to do a full video rundown on that, and the same as Mara, because they're both going to take quite a while to go over. Everything else is pretty straightforward. I'm trying to basically filter out of all the shite now, and I'd like to dedicate more of this account to futures. So what we can see here is I sold an MS put, right? I'm going to go over that one quickly. Morgan Stanley. I sold one contract on this, and as you can see, it is going against me right now, but that's okay. So basically they had the big drop, and I was hoping that Morgan Stanley is going to have some sort of bounce or go flat until Friday. It was up around 86 when I sold this, and now it's broke my strike and it's in the money, but it's only in the money by a bit. I might close this out today for a loss. I think that's probably going to be the smartest thing to do. RSI is not near oversold yet. It sort of market looks like it wants to curl over a bit, so I'm happy enough taking like $100 loss or so on this. Realistically, that's nothing. I'd be happy with $100 loss if I could take it at the open, which I probably will. Riot, we got a cash secured put for 156 days out. I opened this based on big bull flow that came in. That's fine. I'll own it at 8 a share if I need to. That is taking up basically zero buying power, so just going to forget about that position. I've got a closing order in for 50%. We have 100 shares of Bill, which is paying us the dividend on the cash every single month. We also have a couple positions open on QQQ. So we have a call credit spread for this week. And right now, as we can see, that is going to be opening up pretty much it will be opening up in very good profit because we're actually down around this price right now. So this is going to open up a good profit. My take profit might even hit for it straight away. Sorry about that, guys. So this should open up hopefully and hit my take profit straight away, but we'll have to see about that. Then I also on QQQ have an Iron Condor expiring in 16 days. As we can see, price will open up around here. So this should be in, it should probably be flat today at open, realistically. Next we have a Celsius put credit spread. This is in profit. I really like this position, to be honest with you. It's very wide. I think this was netting like a 5% return in 30 days or so. It's already up 20 bucks. 27 more to go, so gonna keep holding that. No point in closing that out. That's fine. And we've got our copper strangle. Our copper strangle is also doing well. It's up 93 bucks. If we click this and have a look, what we can see is both legs are absolutely nowhere near the money. 68 days to go, so we're gonna keep holding. This is spectacular. Nothing wrong there. We have a hedge. So this is the hedge on our whole account. I'm also going to do a video dedicated to hedging. Okay, this is a very fast video. This is a very fast rundown because this is the first one. I'm just trying to speed over the whole account, and then moving forward we're going to break down things a lot more. We're going to show you every single move that I make. I'm going to show you when I add money to the account. I'm just going to grow this account with you guys basically. So what we've got here is we've got an ES hedge. I paid 275 bucks for this, and as you can see, if I was to open this right now, this is going to pay me 4,737 if this goes in the money. Okay, so this is my account hedge. So if the market collapses and we see a pretty big pullback, this is going to hedge out the losses, especially on the futures trades. So that will be a nice little pickup of 7 or 4.7k. If we come down more, I'll add in more hedges if needed. But right now, I feel like this is the only hedge that I need for the adequate positions that I've got open. So for that, I'm fine. So basically, guys, that's it. That is the very quick rundown of the account. as we can see, very red at the minute. That is going to change. As we start to chain all these future trades in, they're really going to link up, and the P&L is going to start spiking massively. I actually closed out mostly all of my futures positions coming into the start of this year, at the end of last year, because they were also green. I'm starting to re-enter now. So this is perfect. We're going to start to get that chain built up again of these 112s and these strangles, and eventually in about 2 months time to a month's time, we're going to have these positions expiring every single week, and the goal is 2.5% per month, between 2 and 2.5%, and that's including after taking the hedge away. I think that's very possible. January and February are going to be very slow, unfortunately. That's just the way this goes, because I'm adding into all the positions now. Then the rest of the year we should see that consistent and slow growth. So thank you very much, guys. There'll be a link for our group in the description. Hope you guys enjoy stuff like this, and if you can give me some feedback, that would be fantastic. Thank you, guys.